FutureSpeak, June 9th, 2021. Okay, great stuff here to look at. Of course, very interesting markets right now. I'm going to show you a lot that really points to a coming top in the stock market. I think you're going to find that interesting. We had been suggesting all along that there was going to be a correction into May and then a rally into June, and that turned out to be pretty much spot on. The expectation was the stock market would test the old high, S&P 500, about 42.38. It has done that. We also talked about the potential for it to getting up to between 4,300 and 43.25. That potential, of course, is still there. We will look at that. But there are things that are coming up right now that I'm going to show you that I think are representative of a reason to believe that the stock market will top below the 4,300 level, and maybe sooner rather than later. I'm going to show you the VIX, which looks like it's about to bottom. The bond market, which is moving up, which says to me that as yields fall here, there's money moving into bonds and trying to find its way into a little safer areas. Again, we're looking in relation to the yields falling, we're looking at the dollar also falling as money tries to find a little higher return elsewhere, or is a little bit more afraid of what the falling dollar could mean. And that dollar has a lot of risk in our mind. You're going to see that. And the indexes overall look like they could be making a double top here. And we're getting some stalling as we see the meme stocks, these crazy valuations in some of these stocks the speculators are playing in, really stealing some of the thunder from the market, really grabbing the attention. And the index is pretty much just moving sideways and thrashing here up around the all-time highs. I'll also show you that the Russell, which benefits from the falling interest rates as the zombie stocks get a bid because they need to borrow so much money and lower rates is helpful to them. That is all good, and there's been an improvement in the Russell. So we're going to look at energy, foreign exchange, metals, treasury, stock indexes, and the grains and softs. I'm going to do a lot of the side-by-side analysis in here because it's a little bit faster, and I'm trying to keep this video a little bit shorter. So that's what we're going to move into right now as we switch over now into the energies. So this is the side-by-side chart that we always look at. We are looking at a 10-year weekly and a 2-year daily chart that you can see right here and right here. And we're looking at cycle analysis. We have a lot of new members coming on board right now because we're running our popular services preview. So welcome to all of you that are seeing FutureSpeak for the first time. These are cycle brackets on the bottom. These are not cycles. The cycle brackets are a drawing tool that helps us see the average cycle period. A cycle period is from low to low. Low to low, as you see right over here. And you can see how the lows often line up here on this weekly chart. And when you get into an area where there are two cycles, likely entering into a corrective period, is where you have a lot of downside risk. And that's why we have this yellow highlighting right at that point. I'll blow this up and you'll be able to see how that area where multiple cycles are nesting often brings declines. Let's just look at these last 3 cycles right in there, and you can see that this certainly brought a sizable correction while both of the cycles were coming down here, and that's due to happen here. So that's, we'll say, somewhere a peak somewhere in July and declining out into September. So this is the really weak period. In the meantime, we have been projecting to see light crude up into the 70s. This level right over here is about 77. Looking at that chart, and then if you look up here, you can see that there are fib extensions up here at 82 up to about 89. We doubt that. As you can see, we think it's going to stop in this area as we look at this cyclical harmonic family right there. And this is still a very good condition. All of these energies are strong right now. I think you still buy the minor dips that we're likely to see. We saw gasoline stockpiles grow, and that kind of stalled the upside move today a little bit. On the other side of that, Secretary of State Blinken came out and said many of those Iran sanctions are going to stay. So that gave a little bit more hope for the bulls, that the Iranian oil won't be coming out and flooding the market all that soon. And that's helping this market. We look at the reversal scout, that's right over here, which is the momentum indicator. And when the reversal scout turned down right over here, we got into this really minor corrective area, as you can see. Really, the 13-week gave it support. That's the 13-week simple moving average. And then this reversal scout turning up right over here confirms this low. And now we're in this rising phase. So you can see in here we have good strength in there. So this is going to buffer anything that on the short term that could give the market a decline. Here is your daily chart there, and you can see on that daily chart that is has an upward trend in here. Here's your cycle low right over here. You'll note that the cycle lows don't have to come right at the point where the ideal cycle suggests. So this is the actual cycle. This is the ideal cycle. And the ideal cycle would peak in the middle and then come down through the exact time frame. In this case, it peaked on the right side. It's called a right-hand translation and is bullish. It leaves less time for a decline. If this decline was going to be turning negative, it would have broken this low. So what it says is that the next rally is likely to take out that high, which it did. Note in here, momentum is strong. It turned neutral for just a few days while you were in this corrective period, and then it turns green again, and then the bottom is the slim ribbon PO. The slim ribbon PO is a signal indicator for the slim ribbon, and the slim ribbon turns positive right over here. This is about to give another positive signal likely, and you could see the value of the positive signals in here as they keep telling you that the market is strong, and that has been the case. So light crude telling you the story for the complex, for the energy complex here, and I'll stay on the side by side for the next couple. So /RB is going to look similar, though the cyclical periods are a little bit different, so it doesn't line up exactly with light crude. If you look right over here, here's your light crude chart, and here the blue line right in there is the gasoline chart. So the actual cycle does not line. These are out of phase when we look at that, but still you see positive momentum here, about to get a bull signal here. All of these bull signals showing you that on the daily chart. Momentum in here turns up, as you could see, and that was confirming the low that was made here on the minor cycle and still pointing upward, which likely to get you up to this around maybe 230 on the gasoline market. So very similar to light crude, as you can see. Heating oil, I think, is a little closer to light crude when I look at this chart, as you can see that it's, again, very strong. It comes up and hits the fib extension right there. You can see this upward cycle patterns as the momentum is strong. Bullish signal, bullish signal, bullish signal, all very clear. Here's where the slim ribbon went positive, and the slim ribbon will guide you as far as how to direct the bias of your positions, and you can see the value of that. You wouldn't want to go short in here, especially don't want to go short when there's an alignment between the intermediate reversal scout and the short-term slim ribbon. That is when you get the biggest impulses on the upside. You get the biggest impulses on the downside when they're aligned up on the downside. So these are very, very important indicators to use on multiple time frames, and they will help you stay in the right direction. Again, gets up to that fib extension right up over there, likely to get a little bit of a pullback. So for light crude, we're looking for a dip to about maybe 68 and then be moving up to about 73 into the third week of June. And most of these are pointing to rallies up into the third week of June. You can see here that we're suggesting this peak up here is in early July. Then this rally would be rolling over and then get into this corrective period. So when we get into a time frame when both of these, this cycle right over here is declining, and you have a daily chart that is in a corrective mode or declining, that will be when there is downside risk. In the meantime, you don't have that. It's quite strong. We'll look at natural gas, which is one that we were looking for an upside move. Our analysis on this has been really good. And you can see in here that this nested area right over here is where 3 cycles were coming down. That brought this decline that we were forecasting. Then you get into an area where 3 cycles are rising, and the momentum turns positive right in there. And you can see that positive momentum gives you a very, very good time frame for when the momentum goes positive here on the daily and then likely to go up. The slim ribbon PO can't even dip enough to give you any kind of a signal. So that is, a very positive look that we have in here. And we were looking for 320 to 340. It made it up very close to 320 or about right over there and then started to back off. I don't see any reason to expect that it will then that will back off in any significant way. So potentially 330 in here before you get any kind of a back off. Note where the minor cycle in here was correcting. That's during this time frame right over here where these cycles were all rising. That puts you into a buy zone in here, and that's what we do and what RV works on every single day, to create the most advantageous entry zones for trades. That's what our trading ideas are for level 3 and level 4, where we then establish areas that we think it's the highest probability to enter into a trade and suggest the bias. In this case, it would have been a long side bias, and that would be still in place moving up, unless it's already made our upside projection, which it had. And then we would simply say that that favorable entry time frame is gone, but the trade would still be good, and this is still positive, as you can see. So that is a look at the energies. Overall, extremely strong, still looking quite good. I would not expect anything other than a minor decline right now in these energies, and then moving up again. Now we're going to switch over to foreign exchange. We'll look at dollar, euro, British pound, the US dollar versus the Japanese yen, the Aussie versus the dollar, and the US dollar versus the Canadian. So we'll look at the dollar index, and the first two we look at are futures in the euro and the British pound, and then we look at cash pairs after that. So the dollar is in a risky time frame right now, where it is moving down into the final stages of the cycle. That's where there's the biggest downside risk and for the highest probability of capitulations. So we're in this very weak period. Now, a lot of analysts out there are saying that the dollar is likely to be bottoming, and we say not yet to that. There may be important bottoms coming sometime in the next month or two, or 3, but it really to us doesn't look like that time frame is yet. And if anything, that is suggestive that interest rates may be in a period where they're going to keep declining. So let's switch over now as we look at this we're going to move out of natural gas and into $DXY, the dollar index. Get this to highlight. There we go. Okay, so I'm going to blow this up so that you can see that there's just amazing harmonics in here when you see the way these cycles align. Those blue timing spikes are pointing up to the key lows, and you can see how each of those are pointing up to very important low time frames right here. Here, this was invisible. This was a left-hand translation that was very bearish. Once it broke under there, it was really bad, and you can see how it broke down to this level. Then you got into an upside rebound, this big diamond that formed on the COVID panic. and then the bottom that that came down here around 89.20, which was actually about 1 point above where we had projected it to go. So now where we are is, let me just get a closer look in here. Getting into the final stages of this decline. This was really where the big risk is in this last 3 to 6 weeks, where you can get a lot of heavy selling coming in. Were that to happen, of course, based on short-term inverse correlations, for sure, that would be beneficial to gold and silver, which I'm going to show you is getting into a time frame where they could have significant pops on the upside. So here's your dollar index right here. Here's your dollar index on the daily. And you can see that it looks like it bottomed in here. But these are big resistances that are coming in here. So there are 2 resistances that we're working off of. One of them is from the peak here to the bottom over here, which gives you this pair right over here. And then the next one in here is taken from this level right over here, that cycle peak, or this cycle peak that's kind of invisible, and these lows right there. So we're not exactly sure which of these to take it from, but there's a lot of resistance coming up here when you look at the 90.5 to 90.70, and then right up here at about 91.15. Those are big resistances. And you can see that while we still think that there's potential for some upside in here for the dollar, that will likely fail at these levels and then be moving significantly to the downside after that. So when I look at these cycles right over here, I'm just going to look at the time frames. This is first week of July, basically. This is the end of July is where those line up. So when I look at that, it helps me with the guide in here as to where this low is likely to come. So right now we have this projected to the first week of July. If it wants to go to the end of July, it's really going to extend this weekly pattern out. Now that could happen, or it could be that early July you get a bottom and then you rally a little bit and come down and test the low in late July, and then you begin to move up. So this is the risky period, and then once this decline is over with, you're going to get into a favorable bouncing period. So if we're right about this analysis, that would suggest that there's a window of time in the next 1 and 2 months where the metals could do better when I look at that. So that's a look at the dollar index, which to us has a very significant downside risk. So if the dollar is likely to go up through, if the dollar is likely to go down, and maybe hard down, through the next 1 to 2 months, then the euro would be set up to do the opposite because they're inversely correlated, and that would set up /6E into a period where you would expect in advance. So when you look at these patterns, what you look for is confirmation of that. And you can see in here, as we're looking at these cycle patterns right in here, that on the side-by-side, this is very strong. You can see as this reversal scalp turned up right over here, it confirmed the lows that came right there and put us into a period where it was likely that it would continue to move on the upside. Now, getting below the 78.6, which is this line, and then recovering above the 78.6, which is this line, only happens in about 20% of cycles, maybe less. That is an unusual condition, and it really does speak to the strength in here. Now here where this is likely to continue up is potential extreme dollar risk. And then out over here, again, it's going to show up in August for potential extreme dollar risk. So there are a couple periods in here where the dollar is going to have to survive periods where the euro could rally pretty strongly. Now you can see this is where it rises on the reversal scalp, telling you momentum is upward and strong. And then when you look over here at the slim ribbon, you can see the slim ribbon PO giving you these positive signals. And as this cycle over here runs out of time, it gets into this buy zone right over here, which is showing you how resilient it is and likely to be moving up. So if we're going to have this period here where it moves up, along with this right over here, that's where there's dollar risk, because the euro currency is 57% of the dollar and that of the dollar index. and that puts us into a period where you're likely to have a lot of risk. So now we'll move into these other currencies quickly. /6B, the British pound, extremely strong where you look at this. Everything is pointing to the upside still. Resistance up at around this 227 area, which is where we think it's going to go. The resistance right on here, the top of this fib extension, is about 237. So there is lots of upside room in here. Fib extension right up over there at 239. So 237, 239, a distinct possibility when you look at that. That is a good look at a positive condition here. That's funny. This is so unbelievably close to the British pound. This is gasoline while I look at that. /6B is the British pound. And you can see this is, it almost matches what I was just showing in gasoline. I didn't catch the difference on that until I just saw it, and the price is not that far off. All right, 142 here in the British pound, and moving up over here to a similar level on the daily chart. 142, all the momentum conditions positive. I'm still laughing at myself for making that mistake because they're so close. In a rising phase here, positive momentum. Here, again, getting into the buy zone and getting ready to move up. And that is the spot where we would expect that the British pound would then be moving to the upside. So /6B is the British pound. The other one I showed you was gasoline, and they look amazingly alike. So projecting here to the upside in the British pound market. Now we're going to look at the US dollar JPY. Now before I switch over, remember I was saying to you that the dollar looks like it had a lot of risk because the these other currencies are looking strong and the cyclical patterns say dollar going down. Well, here's the euro and the British pound set up to go upward. And now when I look at the US dollar versus the Japanese yen, which is a reciprocal chart, you can see in here that we are now in a period where the US dollar is likely to decline. So right in here is a risky period. Here, this is a positively configured cycle. It's actually pointing maybe a little too high. But then after you get this kind of zigzag in here is where it points on going down again. So because this cycle right over here is so positive and at the support zone, it says to me that this is a little premature to expect it to move down, that maybe it gets back up to this level just over the 110 area, and then when this cycle over here moves down, it will join these over here and you get a bigger decline. So this looks a little premature to me to be shorting the dollar against the Japanese yen. The next one we'll look at is the Aussie AUD US dollar, which looks to me like it is about to have one more little dip and then be moving up again, as you can see right over here. This little dip right there, and then this decline right over here in line with it, and then it makes a bottom and then be moving up. So again, what we're looking at is most of these currencies showing that there's a period of weakness for the dollar coming up. The US dollar versus the Canadian, which has been so pegged to the movement in oil, just as it has been extremely clear. We've caught these move beautifully, and now where we are is final stage. So this looks about like 2 weeks, 2.5 weeks, where this is likely to fall. The dollar moved down. We're looking for the oil market, of course, to keep moving up. So this is kind of in alignment with it. And the low over here syncing up pretty much at the same time frame. So this big decline that we're looking at, you can see though every time the momentum condition turned negative again in the reversal scout, and then the momentum here aligned on the downside, you got these big breaks to the downside, every single one of them. This is how you catch the big impulses, by using these indicators on multiple time frames, and it's very clear on here. Hits the sell zone right over here, and they all move down together. And now we're in this period where there's good downside risk still, and there's a good potential for this market to get down as low here as about under 118 before it makes its bottom. So this is a pretty important key time for the U.S. dollar versus the Canadian, and a time when the U.S. dollar could get hit pretty hard again against the Canadian for a brief period of time. I want you to notice on the bottom in here the slim ribbon PO. Now, every single time that it tried to rally and you got the signal, the market fell again. You can see that. It just is not able to hold any kind of a rally. What's important to see is that this is kind of a triangular shape going on here, and that's likely to give you a breakdown over here. So U.S. dollar versus the Canadian has a lot of risk right now, and that could be very much in line with this period where we think the dollar could get hit. Everyone we looked at here, the euro likely to go up, British pound likely to go up, U.S. dollar versus Japan likely to fall, the Aussie likely to go up after a week of another bottom, and against the Canadian likely to get hit for another 2 or 3 weeks. All of that points to pretty sharp potential for decline in the dollar. If that's the case, probably points to a period where we can get a rally in gold and silver, and let's take a look at that right now. So we'll take the /GC when we look at the gold market, and let's just blow up gold right in here, and you'll be able to see the cyclical patterns that we are looking at. So this right over here, we're looking at the big pattern in silver. That's what that dashed line is, and we've updated this a little bit to make this a little bit clearer and pulled out some of the older cycles in here. But where the bottom came in here, there were an alignment right here for the minor cycle. So you can see the minor cycle bottom right here, and then the minor cycle bottom right here, and here, and here, and here. All of those. You can see that. Well, there's a minor cycle bottom due in the next couple of weeks, and that should set up a good upward move. Right now, it's very strong, as you can see. You get this upward move in the reversal scout. It is positive. The supports are right over here from the daily chart. It came down and just got into that zone and then bounced up again. This is where that cycle aligns, where, you know, this has a few more weeks for this corrective period. It could pop first before it then does come down. You can see we have some space in there for that to happen. Maybe you get up to maybe 1930 even, up into that area before it does correct. The daily chart looks a little bit different than that, but this is really strong. You can see that anytime it wants to end this minor cycle in here, we're going to get into this next period of rise. And remember, we've talked so many times about, in this video alone, about the importance of these multiple time frames. The reversal scout being the important intermediate momentum condition right in here, aligning with positive momentum conditions right in here. Look what happened here in gold on the short term. You have these bottoms right over there, and then turning up already. That's why I said you could get a move up first before you finish that little intermediate correction. And here the prices that it points up to, as you can see, up to the 2000 area. So you have some target right over here around 1947. When you look over here, this up here is 1930. So 1930 to 1947 on the near term looks very possible to us looking at the gold market. /SI. Now you see when we look at that, the short side makes no sense whatsoever. Yeah, it could go down, but what's the probabilities of it going down? Well, the same thing when you look at silver in here. When you have the intermediate pattern pushing up and you have the short-term pattern positive, and look at these signals over here, then the probability is that the next impulse will be to the upside. That means you don't want to be short. The price could fall, but the probability of it falling significantly versus rallying significantly is probably 3 to 1 against. In other words, 3 to 1 for a big upside move versus a breakdown. A breakdown would take you underneath this level right over here at about 2708. That's how you would get a warning. But when you look at the formations we have in here, looking at these complex cycle structures, we're moving up into that top of that structure that points up towards the $30 number right there, and it seems pretty likely to us. So under 2709, as you can see, we have listed here, aborts this positive condition, and we always want to have that in there. We call that the reevaluation level. And that's really important to always have. That's my reevaluation level right now, 2709, about $1 below where it's trading right now. And the probabilities are very high that it's going to be moving up. So gold and silver, all momentum positive. Gold, 1947 to 1970s, looks like a pretty reasonable spot from the upside. Silver up into the $30 area pretty soon is what that looks like. All momentum positive when you look at this. Now I'm going to switch over to platinum, which we have been negative on, and you can see in here conditions that are suggestive of topping. We saw that it had gotten blasted on the upside in this upward panic right over here and gave you that warning or the sell signal here, and it hasn't been able to get above it since. You then put the flag formation on here, so this minor cycle rally was a flag. It then broke down. We had been projecting in here that it could get down to as low as about 1090, and that's still pretty likely. We showed the head and shoulders top being formed in here as these cycles were creating that. You can see here momentum turned negative. It's been choppy, momentum negative, positive, but couldn't make the high and then negative again. This time frame over here is out into the end of July. That says that these cycles over here are likely to be in a downward stair-step pattern into the end of July. When you look at that, you see the head and shoulders. The head and shoulders measurement here is under 1,000. That's a long way down. And then there's support from the weekly here at around 1090. Right now, we're going to look at that 1090 level as something that is pretty likely. See the cyclical patterns in here. See the momentum conditions in here. Momentum negative here as the reversal scout has turned down. Momentum negative right over here as the slim ribbon has turned down. Actually, just missed these sell signals, sell warnings right in here because it was too weak to get up above the 25 level right over there, and very weak, as you could see. Probabilities of a decline much bigger than probabilities of an advance. Just real clear when you look at that. So momentum in here is negative. All momentum is head and shoulders pattern in place and broken down. And maybe while gold and silver rest a little bit before they get ready to move up is when the platinum market will move down in here. So you could see how that looks. Copper /HG is looking right over here like, well, see the head and shoulders forming on the right. Again, it is much more negative than the gold and silver market. Not quite as bad as platinum. Why is that? Because it's been able to maintain its positive momentum, as you can see right in here. And the momentum here choppy and has gone neutral. You see this is blue right there. Some attempts to turn positive failed. So you could see it weakening. You could see this head and shoulders look right over here. And this points to a potential breakdown into about close to the $4 level. The support in here on the weekly down as low as 431. So the $4 level comes down around this triangle right over here. The next, we'll call it 4, 5, 6 weeks, are periods where it's likely that a rally is not going to be able to hold, and it's likely to be moving down. So while gold and silver are positive, platinum is negative, and copper is weakening. And that's really what we have. And that's what's important to look at, are all the correlations within the different sectors that we look at. So I hope that is really clear as we look at that. So the next thing we're going to switch over to and look at in here is the market in the treasuries. The treasury market is pretty strong as we look at it now, and it's looking like yields are likely to fall for some number of weeks. So we're going to start out looking at TNX. The yields have a short-term breakdown when we look at this, and futures momentum is beginning to turn positive. So let's switch over to TNX, and you'll see the cyclical patterns in here. And we have vertical lines in here which show you the actual cycles, and on the bottom are the ideal cycles. When you look at that here, blow this up, you can see that, well, the ideal and the actual are practically perfect. And that points to a decline over the next, we'll call it 3 to 6 weeks in yields. You see the range as we designated it in here at about 767 down here to about 147. Now, because it's tested it with so much time to go, it's looking like the range is going to get down here to about 139. So we're looking at 3 to 6 weeks of a potential decline in yields or rally in futures. Why would we get that happening? Well, maybe it's because money is going to move out of the stock market and into the bond market because of the very risky period that we're moving into here. You could see the yields break down in here, the cyclical patterns. If there's 3 to 6 weeks, then this cycle right over here points to July 17th. What would happen would be if, let's say, that level of 647 holds there, you would get a bounce right in here, and then this would then turn down, and you'd get that next decline out into this period here, into that mid-July, which takes you down into potentially the 138 level. And this is all pointing to favorable period in here for the Treasury futures market. So that's your weekly and your daily. They are pointing to yields falling for the next 3 to 6 weeks. I'd say closer to 6 weeks makes sense. When I look at that, we're going to see the futures in here, that they are in rally periods in, I think, a massive bear market. In other words, I think yields are going much higher over the next couple of years, but we're in a bouncing period. This rally right over here, and you see momentum positive, is in this period in here. It's been kind of choppy, but you see momentum basically staying positive. Turned neutral a little bit, and then got positive again. This upward slope that it's trading in, it says maybe you get a little dip in here, but then futures likely to be moving up again. We would expect to see a level close to 134 before this period is over with, where the rally is likely to continue up into this July period, like we said, 3 to 6 weeks from where we are right now. So that would take you into July, potentially late July. When I look at the TLT, a lot of people trade TLT, so they want to see these numbers that we're looking at in here. Same pattern that we're looking at in here, a lot of strength. The upside projection right in here is at about 145.5. So you have about 4 points of room in there on the upside. This upward trend right over here, as you can see in these minor cycles, likely to get some kind of a dip in here, but it won't last, and then moving up again. This resistance here is about 144. This is 147 right up over there. So it's kind of this intermediate pattern right over here, and that's why we have this higher projection right over there as a possibility on the more dominant cycle. So this is a condition that is suggestive of higher prices, lower yields for the near term. /ZB is similar, and you can see right in there the same type of a pattern. We have the colored phasing in here, reasonable to project it up to 162.5. In there, the same kind of a pattern on here on the daily, where it's quite strong. If we get a minor dip right in here, which would be normal, that would be a buying opportunity for the bond market to be moving up again. So overall, summing it up for the treasuries, it looks like yields will be falling for the next 3 to 6 weeks. That puts the rally targets that we have put in the futures in play, where there could be pretty sizable rallies. TLT, ZB, they could easily get 4-point rallies from where they are right here. That makes a minor dip that may be coming up, one that could be buyable, looking for higher prices in the bond market. All of that in the bond market, don't hear me as bullish. We're in a bouncing area right now. where there's an upward retracement happening, I think, in a big bad bear market for the bond market. So while the discussion about inflation, deflation is pretty rampant out there, I actually think it's both. I think we're in a period where we're going to continue to see inflationary spikes and problems. Eventually the Fed will react, and there'll be taper talk, and they'll be raising interest rates, and all of that will bring some shocks out there. But then the deflationary forces, which I think are much greater, will eventually take hold, and that will be a whole another phase out there that may very well be a year and a half away. So it's kind of a big look out there. All right, now we're going to switch over to the stock market. Let's take a look at the stock market, but first let's look at implied volatilities. I'm going to switch over to the VIX. This is important, actually. We did a little bit of a update in here in the VIX on some energetic shifts that were going on, and that's what we do when things change. So you can see in here that this kind of ghosted cycle in there is the one we were originally looking at, and you could see the actual alignments, how they actually shifted left a little bit. And that makes this period right over here that we're looking at a period where implied volatilities are getting ready to move to the upside. You can see in here that it was trying to move down right over here, and it's basically equaled the lows right there. I would not be surprised to see it equal the highs over here and get up to 25 to 30 out in coming weeks, because we think that, remember, late June through early August is a period where we think the market will be declining significantly. So if you compare that to the weekly pattern in here, what you can see is that not only should this cycle be bottoming and then beginning to move up here, but that's an alignment right over here. And you can see these projections that there's going to be a likely increase in implied volatility. So we need to get the, first of all, in here you see momentum has continued strong, surprisingly, because this was so big on the upside, which sets up something big on the upside over here in implied volatilities. Here you still have momentum it really chops around a lot. Maybe momentum indicators are not that valuable when you look at something like the VIX. What's much better to do is to correlate the energetic movements in the cyclic harmonics with the stock market. So if right now this is pointing to the likelihood of implied volatilities moving up, then what it's telling you is that there's a likelihood that there's going to be a need for investors to buy insurance. And the implied volatility is simply a measure of demand for puts, because the more insurance they want, the higher that implied volatilities go. The weaker the stock market gets, or the more threatening it is, the higher implied volatilities go, because they need to buy the insurance. They need to buy the puts. And with implied volatilities getting so low, that makes the insurance pretty cheap right now. So they are going to be likely reaching for puts when the market does get soft. And I'm going to show you that I don't think that's very far away. So let's look at the S&P 500, and we'll look at it on the weekly chart. So all along, what we were looking for was this corrective period to be minor. We talked about it being likely about a 4% decline at the most. It was about 4.2%. And then getting up in here as this declining phase right over here ended, the corrective phase, and you could see it ended a little early. And then we get into the next rising phase. Because of this bullish configuration right in here and upward momentum, which is now flattening out, as you can see, the likelihood of testing this high was very high. When you have only a minor 4% low to the 38% fib, then the chances are better than 70%, maybe 80%, that it's going to test this high. That's why we were looking for that. No matter how bearish I want to be in the market and how much risk I see is coming, I still have to be agnostic and say that the instruments that we use, the instruments of analysis, are what we follow. And that was suggested that the market would be able to rally up to that high of 42.38 and potentially getting up here to as high as above 4,300, 43 to 43 and a quarter. So this right over here is the important period that we're in. Now what we just did look at was the VIX, which was suggestive that the VIX was ready to start moving up again. And the market is starting to move sideways in here outside of the very speculative stocks, AMC, GameStop, BlackBerry, that one drug stock that's going crazy. I can't remember the name. So you can see in here this churning that's going on the daily. These are the complex cycle structures that we're looking at, and the energetic time frames in here have become erratic. This was only a 21-day low right over here after we're having pretty consistent 30-day, 26 to 30-day cycles. So what we get forced to do is to adapt and to adjust that. So we've moved this down to tighter harmonics here of 13 and 26. But when I look at this right over here, this was even an earlier low than that. This was here was the low, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, which is pretty short in there. So this cycles look like they're shortening up. If that's the case, the peak in here will be earlier, and that might be where we are right now. Again, we have rising conditions right over here. Look at the slim ribbon PO. It's very strong. It's not able to dip. We're in a period of extremely low volatility when you see how small these days are. So the volatility is likely to increase fairly significantly fairly soon. So the short-term period in here looks like it will peak soon. The intermediate in here still has some time, but it could also peak. How will we know? That's what's important to know, and that is that this cycle low that was made right over here, which was at about, well, 40, this was about 40.57 or so. I don't have the number in there. If that were to get broken, it would be very negative. We don't have much else right now other than if it gets underneath these supports right over here, the support range being between 41.73 and 41.25. That's the support zone. You could get a decline in here. It could hold and then one more rally before you get anything significant on the downside. This could be a much more complex top as we're looking at it. It doesn't have to be anything that is that severe in here, and it could get kind of a rolling top in here. But then the risks get very high. The probability, the average decline in these type of periods where you get all of these cycles aligning, and you can see in here there are 3 cycles that are aligning right here. It's very likely it's going to be above 11% or more from the ultimate peak to that corrective bottom in here. Now, that's not a crash. I mean, that's just simply a somewhat mild or normal correction in there. And the real difficult period for the market could be the rest of the year after that. I would say that if we had that 11% decline, the next rally phase would be substandard, and that we'd be looking then for a market that peaks below the last high and then starting something more significant on the downside. My analysis from the beginning of the year was that we would have a top in the first half, which I think is forming now, and then a substandard or weaker second half. And there's nothing that I see here other, that says that any of that analysis should change. To show that to you, I need to look at a bigger picture on the monthly chart, which I'm not going to do right now. But I wanted you to see this analysis in here where it's flattening out, it's stalling, and the implied volatilities are showing you that they are likely to start moving up. And the failures that we're seeing right now to move through the all-time high could get investors nervous. If these meme stocks stop moving, well, that could be a problem. Let's take a look at the Nasdaq. The Nasdaq is the weakest of the 3 indexes that we're going to look at. The Nasdaq still has negative momentum, as you can see right in here on the intermediate pattern. It has established positive momentum in here. So when you have negative momentum in here, that is dominant to the positive momentum over here. That should prevent all-time highs in here and then get into this corrective period that we're likely to be coming into right now. So the intermediate momentum is neutral on the S&P 500. It is negative, and the Nasdaq is lagging right now, as you can see that. Now the Russell has gotten really some pretty strong legs in here, benefiting from the interest rate market, which is moving down, and these stocks are moving up based on that. And you can see in here that momentum has chopped its way back to positive. So here you had negative momentum. You went into this triangular shape right in here, and then it began to move up again and is now testing the highs, and momentum has turned positive. The cycle structures in here have been moving within a range, and not, they're not really showing that there's a strong likelihood of it moving, breaking to the upside, but still you can see it does look more positive. So you have positive momentum on all time frames here in the Russell, and that really puts it in fairly good shape. And you can see that the cyclical structure in here we have to show is more positive than the other indexes, because that's what the indicators are showing to us. So with the potential of moving up above that 2360 high up to this level here of near 2400 before this is over with. If it gets underneath this level right over here around 2256, that is your level that says to you things have changed and it's negative again. So 2256, a pretty key level, and it's pretty far from there right now, about 4%. So 3.5%, 4%. So, but starting to give a little ground today, I'm noticing. After these big moves, so taking on a little more weakness. If you want to know intraday about which are the stronger, which are the weaker indexes, you've got to look at the SIR live stream. I mean, it's just so packed with information for short-term traders. It's incredible. So make sure you do look at that. So overall, the picture that we're looking at in here, the implied volatilities, the VIX, is telling us that the market could be peaking soon, and implied volatilities moving up, and maybe moving up fairly sharply. The indexes have, the S&P 500 certainly has flattened out in here, and the stocks that are getting the action are stocks that are essentially they're gambling stocks. People just buying them because they might go up again. It's kind of the greater fool theory. I'm going to buy it because there's somebody else in there that certainly will pay more for this piece of junk I'm buying at these ridiculous prices. So who knows when AMC is ever going to be able to earn any real money again, but they just want to buy that because it's going up. That was the whole case with Bitcoin, which we thought was making a major top and likely to lose 33 to 60% of its value in the first move down, and it lost 57%. So these stocks that are going so crazy right now, they're going to lose 80-90% of their value when it's over with. That's just what happens. I just got the 7th edition to the book Manias, Crashes, and Panics, and I can't wait to dive into that and to read that. And I own and read the 1st edition, so this is a perfect time to be reading that book. All right, so let's take a look now as we switch over and look at these grains / let's start with the corn market / ZC. Here's your corn market right in here. All of these have rebounds that are stalling in the resistance areas. This looks to us like probably another 2 to 4 weeks on the downside, maybe even a little bit more than that. Once this upward bounce is over with, and it is getting a sign that's over with / ZW. You can see in here the same thing, looking like 3-4 weeks on the downside. 630 is a pretty reasonable target in here. This says below 640. You can see there's a sell zone in there. Momentum in here turns negative. Momentum in here is negative, and that says in the sell zone, you sell. I mean, that's just the highest probability. That's the wheat market /ZS. Pretty similar story in here, except for the momentum conditions, which you can see are positive. So if you were looking at these grains and you wanted to get short, you want to be short the one that has positive momentum. If you want to be long, you want to be long the ones that have you want to be short negative momentum and long positive momentum, and that will then potentially give you a pair. So if you wanted to buy beans and short wheat, that makes sense to me on a proper ratio so that you're dollar neutral. That would be, to me, a reasonable pair trade based on momentum conditions looking at this. Still, we would expect to see it move down under $15 over this next well, what does it look like? At least 4 weeks, maybe a bit more. So if this target over here is, let's say, 1490, then that would be moving down approximately 65 cents on the wheat market. If you were looking at the target in here, likely to move down under 640. So that would be 38 cents. So you can see that if you did it dollar neutral and they just went and met targets, you were short wheat, long beans, you would make money because of the ratio in there. So the ratio, what is it, like 2.3 to 1 or something like that? Well, if you made 2.3 times 38 cents and then lost 56 cents, then you would certainly make money. So that's just the way that you calculate that out. Wheat versus soybeans, that's not a recommendation. It's just showing you how I use the analysis in here to give you that. The wheat giving you negative momentum on the daily at the same time that the soybean market is giving you positive momentum on the weekly and the daily. The wheat is still positive on the weekly, and that is suggestive of that setup in the pairs trade. So that's a look at the soybean market. /KC is what we're looking at here. We've our upside projection, which was raised to as high as 170. It trades up over there to 167. It's still in our mind likely to get to 170. Look at the pattern in here. So the cycle low comes here a little bit early in the buy zone. Beautiful. Momentum strong. Rejecting a little bit up in that area, but when you look at the daily pattern right over here, what does that tell you? Well, it tells you, first of all, positive momentum here, and positive signals on momentum. You can see that. Pulling down in here to what is the cycle low time frame. That cycle low time frame suggests you will get another rally. The rally, because this is a positively configured cycle, says it's about 70 to 80% that it will get up past here, past the 167 level. That is why you see this upward projection. And that's why you see the timing in here. So we're likely to see 170 come just in a matter of days when we look at this. The bottom in here, clearly not formed yet. We don't really see any upside, but it's likely to come in the next few days and then be moving up. Likely means it's a higher odds than not when I say that. So that's a look at a still bullish condition and very strong condition for the coffee market. The sugar market that we look right in here, sugar is also still very strong. It looks like it's going to test 18.25 and then get into a corrective period. And you can see how we have that projected on the daily chart, projected on the weekly chart. Momentum conditions all strong still, and maybe that was that little low right over there that we're looking for already. So 14.25 to 14.5 are reasonable upsides before the top in here is seen, and then you'll probably get a correction. So that is a look at the grains and the softs. And now we're going to look at Bitcoin. Bitcoin, the analysis in there, our analysis, we went through a period months ago where it was really a struggle. I mean, the making any sense out of Bitcoin moving to 65,000, well, it was beyond my pay grade. I mean, for only 47 years trading, I have seen few manias like the cryptocurrency market. And then we did that very timely video on the crypto casino, which was only about a week before the big break. And we had been projecting a big break for Bitcoin and the likelihood that it would lose 33 to 60% in its first downside wave. And guess what? That downside wave is not over, despite the fact that it's trying to bounce right now and has traded near 31,000 a number of times. Somebody posted something about maybe it'll make a quadruple bottom. Well, the reasons triple bottoms or quadruple bottoms rarely hold is because if it has the energy to get there again, it has the energy to go through. If there was energies coming that would prevent that, it would have done it already. So the Bitcoin decline is not likely done. And the cyclical picture, when we look at that, will show you that. So /BTC as we look at the Bitcoin future. And let's look here at the weekly chart. So we projected that that great crypto crash, the summer, would come spring and summer of 2021. And the first wave expected 33 to 60%. Well, we got it. The likelihood of this being over is small. Momentum you can see quite negative. Here's where momentum turned negative. We signaled that right over here. And then it got very weak and fell all the way down here to about 30,000. The support right over here around 26,000. At the bottom of that, the top of it right over here around 30,000. So the odds are very high it's going to get into this area. And I think 26 to 28,000 is very likely down in this area, if not worse, if it doesn't really get into a capitulation. Then you get into a more favorable period out over here, which will be a giant bull hook, and then likely to be heading, in my opinion, down again in a very significant way. The next number of weeks all the way out here into early to mid-July are very risky. Here, when I look at these patterns, you could see scary, perfect rhythms in there. And the head and shoulders top, in which we projected that it would be getting down here to about 27,000. This is those supports from the weekly, 26 to 29,000 right in here. And the likelihood that it's going to get down there. So this rally that we're getting here today, which is, look at all the negative signals right in here. In the lows right over here, the next lows due here, what's the probability of this holding and flying on the upside? Well, it's next to zero. I mean, the probability is something like 80% that it will be moving down again and sharply, and that this rally will fail. We have this condition where the likelihood of impulses being to the downside is much higher than impulses being to the upside, because you have negative momentum conditions here, you have negative momentum conditions here, and you have incomplete cycles on both of these, which says this is very likely to fail and then move to the downside again. I've said this in other videos before. At 36,000, that where it is right now, it's mind-boggling that how overvalued this could be, and I think 10,000 is massively overvalued. So it's again, that's maybe a bias based on my historical understanding of markets that I separate very clearly from what is the technical picture that I give you now, which is that Bitcoin and cryptocurrencies in line are in a lot of trouble still, and the likelihood that the bottom has been seen is very small, and the likelihood of big decline still coming is very high. Again, we'll project it under 29,000 to about 26,000 on the downside before this is over with as a best case. That is a look at Bitcoin, and in quite bad shape. Hope you found this video to be incredibly valuable to you. Welcome again to all of our new people that are seeing this video for the first time. And I hope that you decide to stay on as a member at askSlim.com. That is it, and I will see you in the next segment.